Hi again everyone, in this video I'm going to be focusing on the non-habitual residence scheme here in Portugal, what it is, how you qualify and what you need to do to make most use of membership of the scheme. So the term non-habitual residence really is a bit misleading because it implies that you're not really resident here. What non-habitual residence actually means is you haven't been tax resident here in the last 5 years, because that's the main qualifying condition for membership of the scheme. You have to demonstrate that you haven't been tax resident in Portugal in the last 5 tax years. And that's the main qualifying condition, really. There's no more hoops to jump through as such. The only other thing that you need to demonstrate is that you have a property here. So that doesn't even need to be your own property. Obviously it can be your own, but it could equally be a rental property. As long as you have an address here in Portugal and you haven't been tax resident here in the last 5 years, then you're in. It's very simple. So the steps to qualify for the scheme are: you first establish residency here. Now that's easier for EU citizens because you have an automatic right to reside in the EU. So you simply go down to your local town hall here with evidence of your address, an identity, passport, etc. And then you're granted an EU residence certificate. Now that's going to be a bit more complicated for those of you that's coming from outside of the EU, which obviously, as at the end of last year, includes British nationals too. And for those individuals, we now need to go through some sort of visa process, which typically for most of our clients will be either the golden visa or D7 visa. And I've done a separate video to talk about the different visa options available to you. Beyond that, you need to make sure you're meeting the tax residency definitions here in Portugal, and we covered that in detail in video 1, so it's the 183-day rule or your habitual residence here. And then, importantly, you need to structure yourself effectively for the scheme. The important point I want to make, if you only take 1 point away from this video, is that you can't come here and just expect the NHR regime to work for you by default. It has to be tailored to your individual situation and your assets and income. So for example, income producing investments, as a general rule, and this is a broad statement, but as a general rule they work under the NHR scheme. So typical examples are dividends, which wouldn't be taxable here for the most part, and pensions. Now pensions were historically completely tax-free. From April 2020, the Portuguese government introduced a flat rate of 10% tax applying to pensions, but it's still attractive, especially when you compare it with countries like the UK, which you're starting at 20% tax and going up to 45% tax bands. An example of things that don't particularly work under the NHR regime are capital gains producing investments, because it's not geared towards capital gains, the NHR scheme, so you'd be subject to a flat rate of 28% tax on any gains you realised whilst you're Portuguese tax resident. Now there are planning strategies you can use around that, and we can talk about that in more detail on a one-to-one basis, but I'll give you some examples of planning strategies later in the video. So what are some of the pitfalls that you need to be aware of when you come here and apply for non-habitual residence? Well, the first one is that you need to clearly detach yourself from the tax system you're leaving. And again, I covered that in video 1, where I spoke about individuals leaving the UK and Spain as examples, and just making sure you clearly understand the rules of the country you're in at the moment, and making sure you're having a clean break from that tax system. Otherwise, the NHR system isn't going to work for you here. The other issue to be aware of is blacklisted jurisdictions or tax havens, because they're taxed more punitively here. And tax havens could be, for example, Guernsey, Jersey, Isle of Man. Another example of things that don't work are trusts, and it's something that we see a lot of clients have, potential beneficiaries of trusts. And again, if you're taking trust income here in Portugal, it's going to be subject to the flat tax rate of 28% tax. And if it's coming from a tax haven, you're going to have the higher tax charge of 35%. So what are some of the examples of planning we can do? Well, I split this into two different stages. There's planning that you can do before you actually arrive here in Portugal. And examples of that would be realising capital gains before you arrive here. As I mentioned before, NHR doesn't work for capital gains. So ideally you want to be realising any gains that are of a capital gain nature prior to arrival here. So if you're in the UK, you can be utilising annual capital gains tax allowances. You can be selling down ISA portfolios, which will be tax-free, all of which would be taxable if you did that as a Portuguese tax resident. I'm also dealing with several clients at the moment that are based in jurisdictions where they don't have capital gains tax at all. So, for example, Sri Lanka, Singapore, UAE. So again, it's an ideal time to restructure your portfolios, wash out any gains prior to arriving here, and then you can bring a fresh cash pot here for reinvestment. Another example it would be if you're in the UK and you have a pension scheme. You obviously have a 25% tax-free cash allowance as a UK tax resident, which you don't have here. So again, you'd want to be doing that before you depart the UK. Conversely, there's other steps that you'd want to defer until you become a Portuguese tax resident. And a topical example of that at the moment is in crypto gains, because cryptocurrency gains currently aren't taxed here in Portugal. Another example is UK residential property, because there's preferential rules around selling UK residential property as a non-UK tax resident, and Portugal wouldn't tax you on those gains here, so you can potentially benefit from the interaction of the two regimes there. And then the next step is making sure that you're structuring your assets here appropriately. So when you've done the pre-move planning and you're now a Portuguese tax resident, how do you structure assets and where do you do it? So which jurisdictions do you use? Because we wouldn't necessarily advise you to hold investments, pension schemes inside of Portugal. And just a final point, a common question I'm asked a lot is, what happens after the 10 years is up? Well, you just simply revert to being a standard Portuguese tax resident. And if you do planning in advance of that end point, Portugal can continue to be a very tax efficient place to live, even after expiry of the NHR 10-year window. So there's nothing to worry about there. As usual, I'm going to put some links and sources down in the description below, and of course you can always contact me direct if you've got any specific questions about your individual situation. Thank you.